and record. All right, for today, the highlight is an interesting one. Let's say, for example, you're bearish. You think price is going to go down. You're not short yet, but you're bearish. It's hard to change your opinion, whether it's about who's the best basketball player of all time or if the market's going to go up or down. It's always hard to change an opinion once you have it, unless there's the objectivity that you use in changing your mind. When you have objective tools and you know how to use them, that's when trading becomes easier because changing your mind becomes easier. If you're doing it for objective reasons, if you're stubborn, you're going to get killed. People know that have had inconsistent success, even when they've had success or no success. Hard to change your mind. Objectively, you have to allow those tools to change your mind. So um, there's no ego involved. Or if I change my mind, I admitted I'm wrong. That's why you'll argue till you're blue in the face with your spouse or your friends about nonsense because you feel like if I admit that I'm wrong, I look stupid. In trading, it's catastrophic if you have trouble admitting you're wrong because you're going to be wrong, not just with trades, but with your opinions that don't even turn into trades. So let me show you this. In this part of the day, right in here, I thought that the market was going to take out this VWAP and actually go probably down to here, which it eventually did. And it did take out the VWAP for a couple points, but didn't continue all the way down into the low 50s at the time in the S&Ps. But right down in here got me to objectively say, be careful with that bearish thought or short trade. What happened in there? An iceberg came in that they didn't fill right away, and some big sellers came in and they jumped above them. So some heavy, decent selling came in that they went down and then got above, and then another one come in and they got slightly above it. So to be careful thinking that it was going to keep traveling in that path was objectively changed. And guess what? It rallies 4 points. Then it goes. And that's how markets actually move. So if you could go and change your mind, that's what going with the flow actually means in trading. But you have to have order flow or objective things and know how to use them to change your mind other than just gut feeling, because that'll get you in trouble. You could have a gut feeling, but that's because your mind and subconscious have already taken in the stuff that you've trained yourself to look at to say, this doesn't make sense. Well, what doesn't make sense is you're getting selling coming in, you can't get price to go lower. So it creates the ability to maybe get out of a short or wait and get short at a better price. But here's what it eliminates: being short, maybe in the hole because you think it was going to go all the way down to here. You get stopped out and then it goes. How many times does you it get stopped out and then it goes happens to you? That's what you got to work on in 2021 and beyond, because you want to see others get stopped out, thrown off the boat to create better locations. If you're long or short with too many other people, at the very least, that's a poor location.